Well, it's really confusing. A hawkish text. We have dovish dots. We have 3 dissenters or 3 no rate hikes in 2016. But all in all, the market took it, with a grain of salt and really factoring in that we're going to have a rate hike in December. And I don't think investors are really concerned with that. But all that to say, it's just amazing how quickly the market did not react to it because there was just a lot of missing pieces. Moving pieces? When's the last time we had 3 dissenters in a meeting? I can't remember. So the language was very hawkish, I would say, and the dots definitely were dovish.
Yeah, so Larry, I mean, it looks as if December is the next likely chance for the U.S. Fed to hike rates. As you mentioned, I think that Janet Yellen said as explicitly as she ever has that we will see a rate hike coming before the end of 2016. So as an investor, what are you going to be doing between now and then?
Well, even if I knew what the Fed was going to do, I don't think it would really change my investment scheme. I've been underweight U.S. equities since the beginning of July, and I still maintain that. Not because I think there's going to be some crazy crash. I just don't think the risk-adjusted returns are there. I still would look to the U.K. That's something I said back in July, to buy equities there. I do like Japan on an unhedged basis. So that's it for equities. When it comes to commodities, I am beginning to warm up to some of the industrial commodities. They've just been so good and resilient. Also like gold and oil.
Gold did very well today off the back of this U.S. Fed Reserve statement. How do you view U.S. corporates? Of course, we are heading into the quarterly reporting season. Do you anticipate that we'll see sales growth really coming along nicely?
That's a great question. I haven't looked forward to an earnings season more than the one that's coming up because there's a lot of confidence in next year's number, which is $130 a share for the S&P 500. If that's the real number, we're looking at an S&P 500 trading at a 17 times multiple. It's going to be really hard to get the S&P 500 above 2,200 with that kind of mathematics in place, and yet that seems like that's where the market wants to head right now. To answer your question, though, I do think we're going to see stabilized earnings. I think the bar is going to be set sufficiently low. The dollar's been stable. Oil's been stable. So I think earnings will, if anything, will improve just a little bit.
Investment Officer, FSG Alternatives in Chicago. It's been a quick one, but it's been a good one. Thank you.
That's okay. Thank you.